Acer mencipta Aspire P3 Ultrabook yang berkuasa dan ringan dengan menggunakan Intel Inside
Tiesto?
supaya kita dapat menerokai hidup selain daripada kehidupan harian.
Hey, this is my destiny!
The new Acer Aspire P3 Ultrabook, inspired by Intel.
Good morning, everyone. My presentation is just a few slides. I will take a slightly different stance from the first speaker because I'm really a tax professional. So my focus will be really in terms of the ease of doing business in Malaysia compared to some other countries in the region. Because in many situations, whenever we meet a lot of clients, and some of these clients are from overseas, the first thing they tend to ask us would be, what is the tax system in your country? How do you compare to a lot of countries around the region, like Singapore, Hong Kong, Thailand, and Indonesia? So that's one of the first things which a lot of investors will tend to ask. Tax system, what are the incentives available compared to other countries? What is the legal system like? So if we were to do an analysis in terms of how do we compare in terms of competing with other countries in the region. Alright, so first and foremost there, I actually have a slide here which the source is actually from PwC's Global Paying Taxes Survey, which was done for this year. And if you have a look up there, Malaysia is not bad. You know, we are ranked at the top 15 in terms of paying taxes. Alright, and this will people will do this comparison, and when they want to source a location to perhaps come and do business, or source a location to perhaps have their headquarters, they will look at statistics such as these. And if you have a look at this, we're not too bad compared to a lot of countries out there. You see, of course, places like UAE and Qatar rank up there because, you know, in the Middle East, there's hardly any taxes being paid over there. But if you put that aside, then really, if you look at Asia, we are really ranked behind countries like Singapore and Hong Kong. And Singapore and Hong Kong are sort of like tax havens to a certain extent. They call themselves international financial centers, but their tax rates are so low, right? So to a certain extent, they are competing with each other by lowering their tax rates. So we are just number 3 behind our Asian neighbors. The other countries in that list, you'll find that a lot of them are primarily very low tax countries like Bahrain, Kuwait, Mauritius, Luxembourg. These are all semi-tax havens. So as a country that is not quite in that category, we are actually pretty good. All right? And in terms of a lot of CFOs out there, you'll be wondering, if I want to set up in a location, I want it to be easy for my staff as well. I do not want a situation where the compliance cost is so high that every single month I have to do a lot of administrative burden in order to meet the government requirements. So if you have a look up there, one of the things that's being considered is in terms of the number of payments. What are the things that we need to do all the time in a year in order to meet the administrative statutory requirements? And you find that we're not the best, obviously. If you see other countries which are very low in taxes and requirements, there'll be 4 payments in a year, whereas for us, you're talking about 13 payments. And these have actually gone down from 20 over to 13 over the year. So we've actually improved. Yeah, so it's good for the tax authorities to have actually simplified the process for taxpayers. Now, in terms of time to comply, we're not bad, but still, if you compare to some other countries, we're obviously not the best, but we're not bad, you know, in terms of the time to comply. But in terms of the tax rates, we are actually at 24.5 compared to some other countries which would be lower. Now, how do we do this? If you have a look at the details up here, this survey is actually comparing the effective tax rate. You know, Malaysia's tax rate is actually 25%, but effectively in Malaysia, we have actually a lot of incentives. The government gives a lot of incentives in terms of accelerated depreciation. We have a lot of income tax exemption given to various investors. So if we add all of that up, actually, again, we're not bad because it's at actually 7.5% in terms of profit taxes. Comparing ourselves to Singapore, Singapore is 6% effective tax rate. So really, we're not the best, but we're actually not bad. We were fairly good. And if you total all of that up in terms of profit taxes, labor taxes, which people like salary earner, myself, that will actually pay, as well as other taxes like indirect taxes, you add all of that up, it's actually 24.5, as opposed to somewhere like even Singapore is 27.6. Of course, Hong Kong is slightly better than us at 23. And it's a matter of whether we are good, but do we want to get better? So what are some of the things that we can do in order to enhance ourselves even more? Yeah? Now, in terms of the country, a lot of foreign investors and even local investors, what we're finding is, in the past 10 years ago, we tried to attract foreign direct investors, right? And a lot of foreign direct investors will come in and see, does the Malaysian government actually provide tax incentives so that I can locate myself and maybe have a headquarters in Malaysia or a manufacturing plant in Malaysia, yeah? And they do this comparison in terms of the incentives given by the Malaysian government. But nowadays, what we're finding is that Malaysian companies have grown bigger, yeah? And in growing bigger, they're actually going out there to overseas to look for investments, to set up shop overseas. And in doing that, it's very important for the government to realize that it's not only about attracting foreign direct investors, it's also making sure that our Malaysian companies that have grown really big do not actually go out and locate themselves in other countries like Singapore or Hong Kong. I think that's very, very important, because similarly, foreign investors will look at our system. The Malaysian companies themselves will also look at our system and compare to other countries. And if the other countries are able to give them something even better, they may want to consider moving their operations out of Malaysia. So that's something that's very key and important. Now, in terms of incentives in Malaysia, we are actually quite an attractive location because our score of 7.13 in terms of the IMB World Competitiveness Yearbook for last year, we actually ranked ahead of countries like Japan, New Zealand, Australia, UK and China. We have also entered into double tax agreements with 40 countries in the past few years, but the total double tax agreements that we have is actually with 70 over countries. So relatively a lot of countries we have got double tax treaties. Now, one thing that I just want to comment there in terms of tax treaties is that it's good. We actually have a lot of tax treaties with 70 over countries, but sometimes it's the quality of those incentives. Yeah, I think that's something that we can really improve upon, because when foreign investors look at Malaysia as a location, double tax treaties actually play a very important part. Because whenever you do business with another country, you always look at double tax treaties, because the tax treaties actually give you favorable rate. So for example, the Malaysian double tax treaty with Indonesia is really very good. Yeah? The tax treaty that Malaysia has got with Taiwan and Korea are actually fantastic. Right? So if you want to do business in Korea and Taiwan, you should consider setting up a company in Malaysia, for example. But over the years, you will find that countries like Singapore and even Hong Kong are getting more and more competitive. They realize that this is an edge which a country can have. So I've noticed that for the past 5 to 10 years, Singapore has been going out there and they've been identifying which are the countries which are up and coming, like your India, China, Vietnam. And they've been actually going to these governments with very good PR skills and telling them that let's renegotiate our treaty and let's reduce the tax rates. So they've done that. And in doing that, they have now become more competitive when it comes to entering into China, India and Vietnam, for example. So that's something that Malaysia needs to also consider. Not only increase the number of tax treaties, but also to improve the existing tax treaties that we have and enhance the tax treaties with those countries which we know are the favorites of foreign investors. Yeah, so that's, I think, the main thing in terms of my comment would be what are the opportunities and what are the things that we can improve further would be the double tax treaties and probably improving on some of them. And of course, Malaysia has got investment guarantee agreements with most of the major industrialized countries like UK, US and China. Now, in terms of incentives, I think there's a whole host of tax incentives that Malaysia has given to various investors, and we've got like a small little booklet just filled with all of these incentives, yeah. And some of those incentives will be things like pioneer status, which gives investors 10-year tax exemption or 5 years tax exemption, and some of these are 100% tax exemption. We've got reinvestment allowance and even double deduction for some expenses. And of course, we have things like operational headquarters, we have things like tax rebates and tax holidays. So that's all very good. Yeah? And in terms of competitive competitiveness of our incentives, we'll find that we're actually very good. Sometimes our incentives are so good that we're finding that over the years, countries like, I think it was Poland, that copied our incentives. Yeah, and Singapore, they are always looking at what Malaysia is doing. For example, when we had the real estate investment trust tax incentives to exempt stamp duty and real property gains tax for transfers of properties, they copied us and did exactly the same thing. So you find that countries are actually competing with each other in this space. So it's very important for Malaysia. We're very good now, but we should be careful because other people are trying to play catch up, and we also need to enhance ourselves over the years. Now, one of the main comments that I've got to make about incentives is, although we have got very, very good incentives on paper, I think two things could be improved. One of the things would be our application process. It looks great on paper, but when we actually go and apply for some of these incentives, sometimes it takes a little bit longer. Yeah? Sometimes the authorities, in being very careful, they tend to ask a lot of questions, they need a lot of information, and our clients sometimes can get very frustrated. Why is it taking so long? You know, it seems as if on paper it's very easy, but how come it's taking 2 or 3 months or 4 months in order to get these incentives? So probably something that can be improved is in terms of the process of getting these incentives could be enhanced further, make it faster and quicker. Secondly, of course, is that when you give incentives, it's very important that a few years down the line, after the people have come here and set up operations in Malaysia, it's not for our tax authorities to then review and audit some of these investors and say that, oh, I don't agree that these incentives should work this way. I think that's something which obviously needs to be worked out, because it cannot be a situation where tax incentives are given and then halfway down the line, a few years down the line, taxpayers are audited and there's disputes. Because this actually creates very bad impression. I think that's the other comment that I have. So I think I would say that in terms of the analysis, I would think that Malaysia actually has done very well. There's a lot of opportunities, like Iskandar region is an extremely great opportunity out there in Malaysia. We are very good in Islamic finance, also another great opportunity. But obviously the threat here is that a lot of countries are looking at us and trying to play catch up with us, trying to improve. And obviously we need to ensure that we pace ourselves and keep up to that competitiveness of the country.